Welcome back. Our next guest is a veteran U.S. investing professional who believes stocks will move higher in 2025, and he likes U.S. large caps, including those in the energy and financial sector. Let's welcome Scott Wren back to the program. He's Senior Global Market Strategist at the Wells Fargo Investment Institute. Scott, thanks a lot for being with us. Always great to have you with us. As 2024 draws to a close, you do expect stock prices to move higher in 2025. What are some of the macro factors that you think will push stocks higher?
Well, Paul, I think there's going to be plenty of liquidity out there. I think you're going to see inflation a little higher than what it is now, but not too high. I think the economy is going to pick up speed in the U.S. in the second half of the year. And I think also we're going to see the global economy do a little bit better, too. So I think those are some of the factors that for us, earnings growth is going to be pretty good. But those are some of the factors that make us want to remain in the stock market. Now, saying that, we've trimmed back to a neutral weight on things like technology and consumer discretionary. We still like communication services. Another sector that we like that you didn't mention is industrial. So I think there's some things to do here, and we're hoping, to be honest with you, for some further downside volatility here, because I think downside volatility is a buying chance. You get down the first level. I think you could see on that would make it pretty interesting is, say, 5,750 to 5,800 in the S&P 500. We're way above the 200-day moving average, but I'm not sure we're going to get there this time. But we want to buy on these pullbacks, and we think the economy is going to be better globally and here by the end of next year.
Tell us more about your view that there will be lots of liquidity in the market in 2025. And I asked that question because we spoke with a Canadian investing professional earlier in the show who took the opposite view. He's concerned about declining liquidity in 2025.
Yeah, I think, there's a lot of, we know there's a lot of money on the sidelines. I think bank reserves are going to be good. I think there's going to be more demand for loans. You've seen small business optimism here in the last couple of months pop up. There's higher confidence. So I think from a financial sector standpoint, not only are banks going to have plenty of money to lend, but there should be some more interest in from the consumers and from businesses to get those loans. So business CapEx from large companies have been, really pretty good over the last year. And I think you're going to see probably a very noticeable increase from smaller businesses. Now, saying that, we're neutral small cap stocks. We had been underweight for quite a while, as many in the market had been. We're not ready to go overweight there, but certainly if you think that we're going to see a pickup in the domestic economy in the second half of the year, we expect a couple of slower quarters here. But then after that, we'll be looking closely at small cap stocks to see if we need to go overweight there, and also some sector shifts we might want to make. But we want to be optimistic. We want our clients to be optimistic, and the bottom line is we're hoping for some downside so we can pick up some stocks here at cheaper levels.
As we've noted, energy is one of the sectors you like, and I find it interesting that Wells Fargo's call on West Texas Intermediate crude is for it to reach as much as $95 a barrel U.S. in 2025. That kind of call is increasingly contrarian these days. There's all kinds of very dreary forecasts on West Texas Intermediate crude oil generally in 2025. Many people see an oversupplied market. Why are you different? Why is your call different?
Well, I tell you, Paul, I think from our perspective, clearly oil's down because the global economy has slowed. And I think that if you see not just the U.S. economy pick up in the second half of next year, but you see the global economy pick up next year, there's not going to be an oversupply. So our energy group thinks that is going to be the situation when we have a little bit more of a synchronized global recovery. And in that case, we're going to see some higher oil prices. The $95 you mentioned is at the very top end of our range. It's an $85 to $95 type of range. So I think that makes some sense if you think that we're going to see a better global economy in the second half of 2025.
Are we in the early stages of a commodity bull market?
Well, if you look at it really, if you're a believer in commodity super cycles, we would have argued that in March or April of 2020, you started a new one. Commodity prices had been depressed before that as a whole for quite a while. And if you look at, let's say, if you look at it on a chart and you compare the last couple of commodity bull super cycles, they always take a time out and trade maybe a little bit lower. And we think we're in that stall zone right now where some of the gains that we've seen have come back, which obviously they have. But then usually once the economy, and especially the global economy, gets cranked up a little bit more, then you see a continuation of that super bull. So we've been overweight commodities. I think we're going to be staying overweight commodities, and certainly oil has to be a part of that, because we're not going to see a commodity super bull cycle continue if the price of crude oil goes, down to $40 or $50, which we don't think is going to happen.
Scott, thank you, as always, for joining us. Scott Wren is Senior Global Market Strategist at the Wells Fargo Investment Institute.